Microphone check. Let me know in the chat if you can hear my voice. Let me know, post in the chat if you can hear my voice okay. Also, please pay attention to the #1 rule in DeFi. It's very, very important. It's the most important thing you will ever learn on my channel. If you're getting into Web3 and cryptocurrency and DeFi, you're going to need a Web3 wallet, which is a seed phrase. A seed phrase is a wallet. A wallet is a seed phrase, also known as the secret recovery phrase. You need to keep that a secret, hence the word secret. So keep your seed phrase to yourself. I recommend keeping it as a hard copy, paper, or they have like metal things where you can record your seed phrase into a piece of metal. Whatever, keep it as a hard copy. Don't store it as some file on a computer or a file on a phone, because that device could get hacked. And then if you lose your seed phrase, you're going to lose all of your crypto as well. Keep it as a hard copy. Never give it to anybody. That should go without saying, but you really would be surprised. Don't give it out to anybody. They're going to try to trick you into giving your seed phrase to them. Don't fall for the tricks. Never email your seed phrase to anybody, not even to yourself. Never enter it anywhere online. So that's a very common scam. They'll trick you into going to a website and entering your 12 words into a website. Don't fall for that. Don't do that. You don't need your seed phrase again in the future. You really don't need it. So lock it away somewhere safe and secure. You only will need to break that out and look at it again in the future if you're restoring your wallet on a brand new device. So you got a new computer, you got a new phone. That's the one and only time you need to pull out your seed phrase, restore your wallet on that new device, and then lock it back away. Hey everybody, thank you for tuning in. My name is Brandon, also known as the DeFi Guide. It is Monday, April 15th, tax day. I don't even have a chance of filing my 2023 taxes on time, not even close. So it's a fairly low stress day for me today. But I hope all of you are not stressing out too bad about your taxes. If you're in the US, I hope everybody had a fantastic weekend. Sorry I didn't stream on Wednesday last week. I'm here in Puerto Rico, coming to you live from the beautiful mountains of Añasco, Puerto Rico. And the power grid isn't awesome here. So on Wednesday last week, we didn't have any power here. So we were running on generator. It's very, very loud. So it wasn't ideal conditions to stream in. So I missed the stream. And thank you for the mic check, by the way. Thank you, Tony, for remembering or reminding everybody to hit the like button. Please like the video right here and now. Let's get the stream up on some dashboards of some new people on the YouTubes. That would be great. And Fate Master, nice to see you. I keep forgetting about airdrops. Right, that is one thing that I do on this channel. If I can get 35 to 40 live viewers on the stream, only 10 of you right now, but if I can get some more participation, I will do an airdrop. So make sure to share the stream with your friends and family and your Telegram groups and all your groups, Facebook groups, etc. Hey, Lillian, nice to see you. Thank you for tuning in. LCM in the house. Tony, nice to see you guys. Thank you so much for being here. What I do on this channel, you guys know, I provide education only. I don't provide any kind of advice. Your investment decisions are yours alone, but I can help flatten that learning curve and help you to make some more well-educated decisions when it comes to making your own decisions. But you click the buttons, you invest the money on your own, so don't hold me responsible for any of your investments. The way I do education is these live streams. I try to stream twice a week, Mondays at 6 p.m. Eastern, Wednesdays at 4 p.m. Eastern. I also have the Telegram group. You can see that scrolling along the bottom, t.me/team drip guide. I encourage everybody to join that group. It's completely free. I'm in there and I have a number of admins at this point. We're all knowledgeable and ready to help you with any question. No question is dumb. No question is too new. You know, DeFi is kind of tricky. So we're there to help. You can trust the people in that public group. Don't fall for any of the people that are trying to privately message you. If you go into that Telegram group in that chat and you ask a question and somebody starts pinging you on the private messages or the direct messages, that's a scam. So avoid that. Just wait for myself or one of my admins to answer your questions in the chat, in the main chat. So tune in to the live streams, ask questions, get answers. I promise you it is well worth your time and effort and energy to learn as much as you can about Web3 and cryptocurrency and DeFi. There really is a gigantic transfer of wealth that is coming. Web3 is here to stay. It is only going to get bigger from here. So it really pays, and there's tremendous opportunities for you to get involved and get your positions established now. Learn all the ins and outs of Web3 and then benefit as that tidal wave of capital comes out of debt-based fiat currency and into crypto, out of centralized systems and into decentralized systems. So without any further ado, let's go ahead and get into today's topic. I'm just going to keep going over this again and again. I know it's pretty complicated. You know, there's a significant learning curve that goes into learning how to provide liquidity on a decentralized exchange. Pancake is just one of the decentralized exchanges, but we're talking about V3 here, where you can designate your price range for which you're providing liquidity. I'm going to kind of gloss over the basics in this video today. So if you want to kind of a refresher course, or if you want to start a little easier, I would recommend watching this video. I did link this video in the description of today's video. So providing liquidity on PancakeSwap V3. This is a tutorial video. It's less than 15 minutes long, which for me is extremely short. And this will give you all of the ins and outs. I've had a lot of good reviews on this video, a lot of people making comments, a lot of people reaching out to me in the DMs, telling me how much they appreciated the way that I explained providing liquidity in this video. So after this stream, feel free to check that video out and learn the basics before you get into some of the more advanced kind of topics that I'm going to be going over today. I mean, I'm going to be providing liquidity, but I'm going to be doing things a little bit differently today compared to how I've done them in the past. What is this? Why did I? Oh, I just wanted to mention that the liquidity that I'm providing today and the transactions that I'm going to execute today are on a network called ZKSync, or a blockchain called ZKSync. The reason why I prefer to do this activity on ZKSync is because I'm trying to farm an airdrop. So ZKSync is an up and coming blockchain, and the theory is they will be launching their own token at some point in the near future. And so there's potential to get a free airdrop of that token, as long as you're somebody that's been participating and you know, utilizing the network, utilizing the blockchain, participating in the ecosystem. That's how these blockchains determine who's going to receive an airdrop once they do finally come out with their token. So if you want to learn more about that, you can watch my February 7th video all about farming for airdrops on ZKSync. And this is my existing liquidity position on ZKSync. This is in ETH USDC. And as you can see, this was my previous range, and the market has been pretty bearish. We're in a correction, pretty steep correction for the last three days or so. So the price fell out of my range. Obviously, while it was in range, I was collecting fees. I harvested those fees and the cake rewards that I had received. a few days ago, continued to receive some fees, and then it dropped out. So this position, I'm going to start today by removing this position. As you would learn in the basics video, as soon as price drops out the bottom of my range here, my liquidity position is converted to 100% ETH. So when you start a position like this, I basically had about half of my value in ETH and the other half in USDC. But the liquidity position takes the opposite side of every swap. So what that means is that as traders are selling ETH, my liquidity position is buying ETH. Well, by the time price gets down to here, I don't have any more USDC in the position to buy that ETH from traders, right? So all I have left in my liquidity position right here is just ETH. And then, of course, it remains ETH as the price continues to stay out of the range. If price had gone out the top, then it would have been the opposite. I would have run out of ETH, selling my ETH to traders who were buying it. And then at the top, I would be left with only USDC. That's a nice problem to have. I wouldn't say this is so much of a problem. It's certainly not ideal. I would prefer that the price stays in my range. But over the long haul, I am bullish on the Ethereum token. I'm bullish on the Ethereum network. I'm bullish on all of these other blockchains like ZKSync that use the ETH token as the gas fee for the network. So I don't mind holding on to that position as pure ETH, right? Because I think in the long run, it's going to, the value of those ETH tokens is going to go back up. And this is just a temporary setback, let's say, in a bull market, a correction in a bull market. Now, what I'm going to be doing today, though, after I pull this position out, I'm going to provide liquidity for a slightly different pair. So this is a website called DeFi Llama, and this is a correlations matrix. What this shows is how similarly do two tokens move in value. So for example, if we look at this row here, this is going to compare Ethereum to all these different tokens. And a correlation of 1.0 would be perfect correlation, meaning the two tokens move in lockstep with each other. They have the same value. When ETH goes up, the other token goes up by the same percentage, and same thing to the downside. So in terms of providing liquidity, what I'm looking for is a high correlation, and I'm going to provide liquidity for both of those tokens that are highly correlated with each other. That's going to provide a fairly steady state price. The ETH token is the ETH price in terms of, I'm going to use Bitcoin. So the ETH price in terms of Bitcoin is going to stay the same, more or less. It'll vary a little bit. And if ETH pumps harder than Bitcoin, well, then that correlation will not work out as well. But for the most part, most of the time, the value of ETH is going to move up and down just like Bitcoin does. Okay. And so rather than providing liquidity for ETH on one side of my pair and USDC on the other side of my pair, which are not correlated at all, ETH goes up and down in value, USDC stays the same all the time, right? So there's no correlation at all. The correlation would be basically zero. So rather than that scenario, I'm going to provide for ETH and Bitcoin. And those two tokens are highly correlated to each other. I should be able to have a pretty tight range. And when trades happen and I collect trading fees, I'm going to be collecting fees in ETH and Bitcoin. So I'm going to be collecting a passive income in those two tokens on which I'm, those are the biggest coins in crypto, ETH and Bitcoin, right? Those are the big ones. They're blue chips, as they say, right? So I'll be collecting those blue chip tokens as I go along. It shouldn't be too difficult to keep the price in range because they're so highly correlated. So hopefully that makes sense. I'm happy to expand on that if people, yeah. Shout out to Jashawn. Jashawn is the one that set me onto this correlation matrix on DeFi Llama weeks ago. And I didn't really get it at first. And then I recently was thinking more about this and messing around with a new protocol called Liquid Warriors, where we're providing liquidity and with bots. And I really started to think through this whole game of providing liquidity and thought, you know what? I don't want to provide liquidity for a pool where half of my pool is a stable coin and where the price isn't correlated at all and it easily goes out of range. Why don't I go for something that's more well correlated? So that's what I'm going to do. Without any further ado, let's just go ahead and do this. So the first step, if I look at my liquidity right here, of course it's inactive because the price fell out of range. So my first task is to go ahead and remove this position. Let me unlock my ledger. And I've lost some value here, which makes sense, right? I originally put in $1,337.26 worth of ETH and USDC. And now I have about $11.50, which again, that makes sense because the value of my USDC didn't go down, but the value of my ETH certainly went down. So let's go ahead and remove this. Now this will be convenient because one of the things you want to do on PancakeSwap is when you get that LP token, which is an NFT, you want to actually stake that token on the PancakeSwap platform because PancakeSwap will actually pay you additional yield, additional rewards in the form of cake tokens. And so when I click on remove, it's going to remove it's going to unstake my LP token and harvest my cake. And then it's also going to remove the liquidity and harvest the fees that I have earned. You can see I've earned a few bucks worth of USDC and ETH that will come. Everything will come out in one transaction. So let me just hit max. See, it says this liquidity position is currently staking in the farm. Adding or removing liquidity will also harvest any unclaimed cake to your wallet. So let's go. The gas fees on ZKSync, I wouldn't say they're super cheap. I think they're more expensive than BNB on the BNB chain, but they are certainly a lot lower than on Ethereum mainnet. Definitely way lower. Keep it a buck. Forex is waiting on PancakeSwap v4, or has he vanished? I don't know. I don't have any information since 2 months ago. Okay. Not sure if that transaction went through. It's not pending. So it probably went through, but because I'm sharing my screen, the little notifications don't pop up. Let me go ahead and look at that. Yep, there it is. So we'll pop that transaction right up there. So I received, here's my wallet right there. So I received some ETH and some more ETH, and I received some USDC as well. Most of it would have been in USDC. which I'm not seeing right away. Oh, excuse me, not USDC. It would have been mostly ETH. The only USDC I would have collected right there was just those $1.56 in trading fees that I had earned. Okay. What's next? So we have the money in our wallet. The next thing we want to do is figure out what our range is going to be. Now let's go to the earn page. Let's go to farms. No, the correlation matrix is chain agnostic, I would say. It's just comparing pricing to pricing. You know, there's definitely some arbitrage between the different networks where the price isn't going to be exactly the same for ETH on one network versus another or whatever. But for the most part, with the centralized exchanges and especially with these big name brand tokens, the pricing is going to be pretty close to the same no matter what chain you're talking about. BNB chain. You have ETH on the BNB chain. Yeah, ETH is going to be roughly the same price on BNB chain versus ZKSync versus Coinbase versus, you know, Bybit or whatever. To the extent the pricing is different, there's going to be bots and all kinds of arbitrage happening, you know. Yeah, I think with Dex Finance, I do have some positions on Dex Finance as well. And the nice thing there is it will do auto compounding, I believe. But I'm only doing that for my positions on what do they call it? Spark swap. So over there on the Pulse chain. All right. So Deshaun and I were chatting about this earlier. There's actually a couple of different pools here for Bitcoin and ETH. This fee tier is 0.05%, meaning that's the fee that traders are paying every time they do a swap. And this one here is only 0.01. So this is like 1/5 or 20% of the trading fees that you're going to get compared to this pool. But the difference here is if you look at the APR, why is that APR higher here than it is over here? Well, that's for two reasons. First of all, your staked liquidity is only 33,000 here. It's 40,000 up there. So that means you have less competition amongst other liquidity providers. Plus, if you look at the multiplier, this is a 0.4x versus a 0.2x. What that means is that dictates how many cake tokens you're going to get, you know, when you farm the LP token. When you stake that LP token, you earn cake. This one earns twice as much cake. So this is going to be the pool that I utilize. And now I just need to figure out more or less what my range is going to be. I know that I'm going to do 50-50. So whatever the current price is, I'm going to go whatever percentage above and also the same percentage below. So in order to put that liquidity position in there, I need to have half of my value in ETH and half of my value in this case, wrapped Bitcoin. So before I even start this process, let me do a quick swap. So there's all of my ETH. And what I want to do is get myself some Bitcoin. Now this is wrapped Bitcoin. This is not the Bitcoin network that I'm on. So these Bitcoin tokens on this network, ZKSync, these are wrapped, meaning the Bitcoins are locked over on the Bitcoin network and then minted over here on the ZKSync network. So I'm going to trade half of my ETH for Bitcoin. Probably should have some lower slippage than that. Let's try 0.5%. You know what? I'm going to go even lower than that. If it doesn't go through, I'll have to increase, but I'll just do 0.25%. And let's see if that will go through. It said the price impact is going to be 0.05%, so that should be well within my slippage. And there it went through. And now I have pretty close to half and half. There's my wrapped Bitcoin, 612, my ETH, 613. Okay, so next we are going to provide liquidity for that particular pool. So I'll just come over here to PancakeSwap and go to the liquidity tab. Actually, I'm going to do this a different way. Let's go back to that farm. I want to make sure I'm choosing the correct pool. Actually, I take it back. 1 second. I want to show you guys something. So let's add liquidity. We're going to add ETH. We're going to add wrapped Bitcoin. Now, the UI is going to give us a choice of different fee tiers. And this little fire icon just means that most people have been picking this pool. But as we saw on that other page, this pool actually is going to give us a better APR. So I'm going to grab this one. And I'm going to just kind of default it now for plus and minus 0.5%. Now that seems really tight, but let's look at this. I want to show you guys this chart. So at the moment, this chart is showing us the price of wrapped Bitcoin. Even though the pool that it's showing us is wrapped Bitcoin with ETH, the chart defaults to showing prices in terms of dollars. Okay, so this is going to show you the price of Bitcoin in dollars. What I want to do is switch it to a different display mode. I'm going to tell it to show me the Bitcoin price in terms of ETH. So I think this is actually showing me, yeah, so this is showing me the price of 1 Bitcoin in terms of how many ETH would I have to spend to buy 1 Bitcoin. So it's about 20. And if we zoom out here, what you'll notice, because the two coins are so highly correlated, the swings here are not drastic. Like we had a 13, at least I think a 13, 10, anywhere above 10 to 15% decline on Bitcoin the other day. Maybe it was just 9%. I don't know, whatever. But the swings on this chart aren't that big. Maybe I'm going to eat my words here in a second. I'll do some measurements. So let's just get an idea of how this price moves, because we're not looking in terms of dollars. We're looking in terms of how does the price of Bitcoin change in terms of ETH, that number of ETH that you would have to spend to buy a single Bitcoin. So it looks like that went down pretty hard, which means the Bitcoin price wasn't holding up as well as the ETH price was. So think about that for a second. Here, it cost 21.5 ETH to buy 1 Bitcoin. Now it only costs 20.3, right? So that means in terms of US dollars, Bitcoin went down harder than ETH. Bitcoin went down harder than ETH. Here's the ETH decline. Here's the Bitcoin decline. I mean, you can just kind of, without even measuring it, you can already see that dropped harder than that, right? Which is, again, that explains why the Bitcoin price in terms of ETH went down. But if they remain highly correlated, if they go up and down by the same percentages for the most part, then this price will actually stay pretty darn constant. It'll stay pretty constant. The value of Bitcoin and ETH should change relatively in the same way. Hopefully that's making sense to you guys. So anyway, I would like to cover myself, let's say, from there to there. That's a 1.31% drop. So why don't I try going above by 1.5% and below by 1.5%? Unlock the ledger. So when I go back over here, I just change these. Let's start out there. I don't know why it's not showing me. Yeah, you got it, Alex. Thanks for being here. I don't know why this UI is being a little bit wonky right now. Let's try this again. Interesting. And you can see the chart here shows that most liquidity providers are higher up. They're kind of centered around this area. I'm going to try this. I'm just going to go with the 1% range here. I'm going to max out my wrapped Bitcoin, and I have to go a little bit lower. I need to leave myself some ETH for gas. So let's try it like that. Now, this is the first time with this contract that I've spent wrapped Bitcoin tokens, so I have to enable that token. I have to give the smart contract permission. Have to give it permission to spend my wrapped Bitcoin tokens. The ETH token is the native token for this chain, so you don't have to give it permission. Let's add. I can already see my APR is not awesome. Part of that is because there's maybe not a ton of volume in this pool. Part of that is because I'm in the 0.01% fee tier. And part of that is because my range is maybe relatively wide compared to, I mean, it certainly could be tighter than plus or minus 1%. But looking at the chart, I was trying to do plus or minus 1.5%. So this is perhaps a little bit tighter than I ideally wanted to go. But at the same time, I want some nice APRs as well. So you know, it's funny too. It's like I'm saying that the APR is kind of low, but look at that, 181%. Even if it was half of that, 90% APR, can you imagine making 90% a year on your money? That's what's happening here. In fact, it's even better than that. And plus, because I'm providing liquidity for ETH and wrapped Bitcoin, the trading fees that I earn are in the form of ETH and wrapped Bitcoin. So I get more tokens along the way. And both of those tokens, I believe, are going to go up in terms of US dollars over time. So it's win-win-win. Now I've created that liquidity position. I'm earning fees. Let's back out and take a look at it. All right, it is active because the price is in range. The last step, and this is something that seems to be kind of just unique with PancakeSwap, is I need to now stake that LP token. When I provided liquidity, the smart contract gave me an NFT, an LP token in the form of an NFT to my wallet. I'm going to stake that LP token in the farm to earn that additional yield in cake. So there it is. So one LP token is available, and I will stake it. Boom. Okay. We are in. We are staked, and this will jump around the APR estimate. I saw somebody asking about the APR estimate. When you preview the APR for, is there a way for Pancake to give the daily yield estimate automatically? Let's explore that. I mean, certainly you can do the math. So APR stands for annual percentage rate, not to be confused with APY, which is annual percentage yield, which generally APY is higher than APR because APY is the overall yield in 1 year, which includes compounding, right? So I could go in here every single day if I wanted to and harvest the fees that I had earned and roll them right back into the position. So I could compound my earnings over time. And that's going to turn the APR into a somewhat higher APY, or maybe a lot higher APY. I don't know. It depends on the math and how often I compound. But because this is an APR, an annual percentage rate, then the math is super simple. If you want to figure out what you're going to get per day, you just divide by 365. So maybe 0.5% a day. Now, again, that's going to bounce around. It depends on where I am, where the price is in my range. It also very much depends on the trading volume. If nobody is making swaps in the pool, then the APR is zero. There is no, trading fees other than, that I'd still be earning cake. And if you see there, it's split. So a lot of my APR, in fact, the vast majority of my APR is coming from the fact that I'm earning cake. Now, this LP fee APR, I believe that this is based on what they call full range. In other words, you don't set a max and a min price. You just provide liquidity for the entire pool, no matter where the price goes. So my LP fee APR is going to be a lot higher than 5.8. And once again, we can always go over to the liquidity page and just see what it is at any moment. Now it has that little farming icon because I staked the LP. Don't forget to do that. I'm speaking from experience. I have forgotten to stake that LP token, and that's just just leaving money on the table. I could have earned some more cake, and I forgot to stake the LP token. So at the moment, it's estimating my APR is 169, basically 170. Oh, I knew there was a screen. I just didn't know exactly how to get into it. So it looks like it has an ROI calculator. And so you can kind of estimate what you're going to earn over the course of a year. Here it says, include farming rewards, staked for 1 year, compounding. See, the compounding really, really matters. So let's say I was just going to compound every week. And price history, let's look at a 7-day price history. Return on investment at current rates, 429%. So see how the compounding really amps it up. Let's see, man. I'm not sure if this properly reflects my actual price range. ETH per wrapped Bitcoin. But that would be pretty nice to start out with roughly $1,200, and then at the end of the year you got $5,000. And that doesn't assume value appreciation. You know, ETH is going to go up, Bitcoin is going to go up, I think. Maybe it doesn't. Anyway, pretty sweet APRs available. And this is what I like to do, guys. I love providing liquidity because it's not like hodling a token. It's not like buying into a project by buying the token and hoping that it's going to go up 100x or whatever. This is just slow and steady wins the race. By providing liquidity, you're earning a handsome APR. You're providing liquidity and earning tokens that you believe in. Right? I believe in Ethereum. I believe in Bitcoin. I believe both of those tokens are going to go up over time in terms of US dollars. And so, you know, but even if price stays flat, I'm still earning a great daily rate, and my position will just continue to grow over time. So I would say this is the lowest risk kind of thing that you can do in crypto. It's the best in investing. They have something called risk adjusted returns. So like great returns are great, but you also need to know the degree to which your money is at risk. Like somebody, you know, they could say, well, if you invest in this hedge fund, the returns are going to be, 25% a year. And you're like, oh, that sounds great. But what they don't tell you is that the risk, the volatility of that investment is severe. And so on your way to making 25%, you might have to suffer a 50% drawdown, if it has a lot of risk built into the investment. So as far as DeFi goes, I think the risk on this kind of investment, providing liquidity, I think the risk is very, very low. And the returns are very handsome. So this is what I like to do. Not seeing a lot of questions. Let me scroll up a little bit. So that I've seen a lot of people talking about V4. And don't get me wrong, V4 is coming. V4 is cool. But whether you're talking about V3 or V4, both situations require this right here. Both versions of a decentralized exchange require a price range. So when you're providing liquidity on a V3 exchange, you designate your price range. When you're providing liquidity on a V4 exchange, it's the same thing. It's exactly the same thing. You have to provide liquidity and give it a range. You have to designate what your min is going to be and what your max is going to be. What Forex has promised us, and I recognize it has been basically almost a year now that he's been making this promise of this protocol. But the protocol that Forex has promised us is something called ROAM, and that stands for Range Optimization Algorithm. Range optimization, think about those words. It's a protocol that algorithmically, automatically optimizes your range. In other words, it manages this function for you. It decides what is the ideal min price and what is the ideal max price at any given time. And then it adjusts that range over time depending on multiple factors, volatility, price history, etc. So that protocol, that product, the ROAM product, applies to V3 or V4. It doesn't matter. Both of those versions require range optimization. So I wouldn't worry about PancakeSwap V3 or V4. I don't think that he's vanished, but I have no proof of that. I've heard rumors. That he's took a vacation. We've seen signs that he's still around and kicking because we've seen updates on Twitter, on X. But I have no information. I have not seen anything in the DAO. I've certainly not seen anything in my DMs from Forex. Nothing. Yeah, Deshaun. Thank you for the tip. Appreciate you, buddy. Yep. We talked about that. So it's just price correlation. Doesn't matter which chain you're talking about. Rentals B. I have been yield farming on Dex Finance, and that has been good. Yeah, I'll have to look more closely at that. Like I said, I'm using Dex Finance for my Pulse chain positions. Testing the waters on extra finance base is pretty hopping lately. Yeah, there's a whole game that you can play looking around the different networks and the different decentralized exchanges. PancakeSwap is just one of many. It's one of the oldest, most trusted exchanges. Uniswap and PancakeSwap, those are the main names in as far as decentralized exchanges. But there are so many other decentralized exchanges out there, and multiple networks. So it could be a full-time job, kind of hunting around DeFi, finding the best yields. I want my investment to be a little bit less hands-on than all of that. I have plenty of other things going on where I don't really have the time to be searching around on different networks and stuff. Also, you have to consider the costs of going from one network to another. There's bridge fees, there's the time that it takes to do it. So by the time you get assets bridged over, for example, you might have already spent the advantage that you're going to get from being on a different chain. But by all means, explore, find what's out there. What really matters the most is the volume. So if there's a lot of trading volume on that DEX in that particular pool, you're going to do well. If there's not a lot of trading volume, yeah, not so much. That's why I picked these name brand tokens on ZKSync. So ZKSync is not a super popular network yet. But like I said at the beginning, I'm also trying to farm myself an airdrop. In the future, I hope to get an airdrop from ZKSync whenever they launch their token. Yeah, I'm not a huge fan of the stable Sable, but that's definitely an option. I would say that is super, super low risk. There's always a little bit of risk involved, platform risk, and there's always a little risk that these stable coins will depeg. I don't think it's going to happen, but it could. That's interesting. Yeah. So, oh wait, that's ETH USDC. ETH USDC. ETH. Okay, no wonder. So here's a USDT USDC pool. It's still the same 0.01 fee, swap fee. That ain't bad. That is not bad. And your principal, your underlying principal isn't going to change. You know what I mean? You can put $1,000 in there and come back 3 months later, and you're going to have $1,000 in there plus whatever fees you earned over the same time. I'm just more bullish on just crypto in general, Bitcoin and ETH and all the big altcoins and stuff. So I like the idea of probably getting some higher APRs. Plus, I like earning trading fees in the form of Bitcoin and ETH. Yeah, Alex, thanks again for being here. I appreciate all you guys tuning in. We didn't get there in terms of the number of live viewers. I'm sitting at 23 right now. So definitely need some more participation next time to do the airdrop. Sorry about that, guys. New preview. Okay, we talked about that. Colin, that is a good question. No, I have no idea when the Solana network will stop having so much trouble. I was providing liquidity on Sol USDC on Solana network for a while. Where did my position go? Oh, there it is. Yeah. So the last time I had provided liquidity on Sol USDC was a month ago, more than a month ago, and then it overran my position, and I was left holding just USDC at that point. But I pulled all of my money off of Solana. It took a day to do it. It took multiple failed transactions because the network was sucking so bad. But I just had enough. Like I want my transactions to go through immediately, or I don't want to wait more than a few seconds. That's why I like BNB chain. That's why I like ZKSync. I never had that kind of favorable user experience on Solana, and then especially towards the end, it was horrible. So I just had enough. So I just pulled all my money off of that. Plus I needed some money for SwapX. So I nailed SwapX last week on Tuesday and got my full allocation. Hey, Angie, I remember you asked me a question in my DMs. I think that was you. Let me see if I can. Oh yeah, you were asking about the perpetuals on SparkSwap. So, I mean, trading perpetuals, what that is it's a futures contract. So rather than trading the spot cryptocurrency, you're actually trading futures. And I don't do that in crypto. In crypto, I provide liquidity. I do futures trading, but I use the traditional futures market for futures trading. I'm day trading almost every morning. And I much prefer a regulated futures market like the Chicago, whatever it's called. Like the name is escaping me right now, but I want to trade in a regulated market when it comes to day trading and futures. Not to say anything against SparkSwap, and we need those futures markets in crypto. That's a huge thing. It's a big need. I think that's a big. There's a lot of product market fit for having futures trading in DeFi. It's just not for me. So I'm not going to be doing some kind of tutorial. I won't be doing any futures trading on SparkSwap. I'm glad they have it because there are definitely a lot of people out there that want to trade futures. For trading futures or perpetuals, as they call them, the idea basically is you're placing a bet. So you if you buy a futures contract, you're betting that the price is going to go up. And the person that bought that futures contract or sold that futures contract to you, they're betting that the market is going to go down. And futures are cash settled. So if the market goes down, some money is going to be transferred from your account as the person who's long to the other person's account as the person who's short. So it's basically betting on the price, as opposed to just buying the token when you think the price is low and then trying to sell the token when you think that the price is high, or different from what I'm doing and what I prefer to do in crypto, which is providing a market, making a market, providing liquidity for a decentralized exchange. But anyway, thank you for tuning in. USD Plus? What is USD Plus? I'm not familiar. I feel like I heard of that just recently, but I don't know what it is. USD Plus, Fate Master. I love providing liquidity. Me too. Such a great way to gain some profits. Yeah, and I think, it's like the ultimate way to hodl. Like, while my liquidity position is here, I'm going to be earning extra ETH tokens. I'm going to be earning extra Bitcoin tokens. And then if the price of Bitcoin and Ethereum goes up over the course of the next year, all those tokens that I accumulated along the way, they're just going to go up too. And my position is going to go up too. It's beautiful. So I absolutely love it. It's such a great opportunity, and it's so easy and it's so low risk relative to so many other things that you can do in DeFi. Yeah, the private sale for the SwapX NFT, I'm surprised you didn't hear about it. A lot of people were upset. A lot of people were really upset because it sold out in 2 hours. 2 hours and 4 minutes, something like that. It wasn't supposed to. And all the estimates were that we'd have, 24 hours plus of this pre-sale. But what happened is, to get registered for the pre-sale for SwapX, you had to fill out a form, right? You had to put your address on there, your Telegram username, and you had to make a choice and predict like how many NFTs you're going to buy. So what happened was a lot of people that had selected the 1 to 2 NFTs option on their form, well, they ended up buying a lot more. And the thing is, there's only 3,000 to go around. They're not going to make more NFTs. There's only 3,000. So all of the people that were in the influencer secured whitelist, everybody collectively bought out all 3,000 NFTs. So the lesson learned there is one that we should all be familiar with in crypto and in DeFi. It's best to be early. You really want to be early. And no one predicted that it would sell out in 2 hours. In fact, there were predictions the opposite. There were predictions, I was told by people on the team, that it shouldn't sell out in the first 24 hours, that we should go to the second phase, which would have been just the early access phase, that we should have more than enough, but that turned out not to be the case. Mercantile. I don't know what you mean. Gary Williams, build it and they will come. Yield farming for the win. Absolutely. Gary is another. Gary and I are part of a small group that are testing out the Liquid Warriors, which are bots that manage your liquidity position for you. They're very, very cool. Developed by a guy named G Money. I talked about this on Saturday night. I don't think we're ready to open up the platform to the general public, but Gary and I are part of a small group that have been testing that out, and it's really cool. My experience with Pulse was Always pretty slow. Yeah, Pulse. I've had the same experience. Not very quick. ZKSync pretty dang quick. Oh, that's a good point. Yeah, yeah. Especially, I mean, I don't. People trade futures in different ways. The way I do day trading with futures, I'm in and out of a position in sometimes in a matter of seconds. So I, yeah, I kind of agree with you there. I mean, I'm doing scalping, so that's a lot different than other people do as far as utilizing the futures market to do trades. But yeah, that's a very good point. Yeah, I'm not going to be for sure not going to be doing any futures trading on Pulse Chain. Not financial advice. You're welcome, Tony. Thank you for being here. Lots of moving parts, lots to learn. You know, that's why I keep going over this. Like so much of my content this year has been related to V3 liquidity providing. There's a lot to learn. It's simple when you finally know what you're doing, but it takes a while to get to that point of proficiency. So, but it's worth it. You know, it's worth it to take the time and to learn how to do this because it's a great opportunity. I think will be a standby staple for people waiting for opportunities. USD Plus. You don't have to stake it to get something back. Well, what is it though? So I think there will be natural demand for the liquidity eventually. What is USD Plus though? Is it a token? Is it a new stablecoin token? And I didn't see it anywhere here. I'm not seeing USD Plus. It's a stable. Okay. Oh, there it is. USD Plus and USDC. Ooh, 80% APR. Interesting. Not a big multiplier. So we're getting 0.4 over there on ETH Bitcoin. Yeah, I'll have to look at that more. Collateralized stable. There we go. Jashan always has a lot of knowledge about different various things. Collateralized stable from overnight finance. Overnight finance. Why don't they just call it fly by night finance? Tony, were you able to get one of the SwapX NFTs? That's awesome. Oh, yes, Chicago Board of Options Exchange is the options market, and Chicago Mercantile Exchange is the futures market. Thank you, Mr. Big. Most stables with a plus after overnight related. Okay, interesting. All right, guys, it is about that time. We are 1 hour and 4 minutes into the stream. It's got, I think you meant big. It's got big APRs on base and extra finance. Cool. Maybe I should expand my my repertoire there and start farming USDC, USD Plus in addition to my Bitcoin ETH. But I'm going to see how this goes. Hopefully the power doesn't go out again here and I'll be able to stream again on Wednesday. Hopefully I'll have something interesting to talk about other than just talking about V3 liquidity again. I would love, you know, if something happens with Forex, if he comes back, or maybe something happens with DripX or SwapX, or I don't know. Doesn't seem to be a lot of activity these days in DeFi. Things are kind of quiet. Other than this kind of stuff, you know, V3 liquidity. But anyway, I'm going to go ahead and wrap it up. I appreciate everybody tuning in. I will try to be back again on Wednesday at 4 p.m. Eastern. I'm going to enjoy the rest of my evening. I can talk. Cheers, guys. I'll see you next time. Thank you.